Okay, you're ready to go.
All right. It is 4:04. I'll call this meeting to order. I'll ask Sherry to please.
Actually, we have a new clerk. Her name is Jacinia. She's going to be calling the roll, okay?
Great. What's her name?
Jacinia?
Great. Jacinia, take it away.
Mayor Elorza,
Present.
Mr. Lombardi,
Present.
Councilman Igliozzi,
Present.
Ms. Silveria,
Present.
Mr. Costello, absent. Mr. Hirsch,
Present.
Mr. Winkleman,
Here.
you have 6 present, 1 absent.
We have a quorum. Okay, ready, all set. May, whenever you're ready. Oh, no, May, you have to unmute yourself. Okay.
All right.
Okay,
Well, thank you, everybody. Welcome, Jacinia, to the team. Great to have you on board. I want to begin by.
That's Jacinia.
Hi, Jacinia. And I want to begin by thanking everybody that's part of this committee for giving up of your time and to support and serve the city in this capacity. We truly appreciate it, and we don't take it for granted. With that, we're going to get started on our agenda for today. We'll start with our investment performance analysis, and I'll hand it over to you, Eric.
Thank you, Mayor. Hello, everyone. Thank you again for the time today. You should all be in receipt of your monthly package of material. And as usual, if you would turn to your first page, page 1, you will see the current estimated investment position and performance through August 24th. So we've given you an updated estimate through the 24th. And as you see, the rally continues that we've been talking about over the last several months. We're up another 2.8% month to date. And of note would be the equity in the portfolio. You see the market rally has continued, quite strongly here so far month to date, up, 4, 5, 6%, depending on which manager you're looking at, with equity being up 5% month to date. So very, very strong. Again, only 3.5 weeks. Markets continue to rally. You can see that growth continues for the most part to outperform value. We've been talking about that quite a bit in recent meetings. But for example, if you look at year to date at the top of our page for our value index fund and our growth index fund, sort of the Vanguard Value, Large Cap Value Index Fund, is down 9.1% year to date, and the Russell 1000 Growth Index Fund, the growth counterpart, is up 25.4% year to date. So this huge divergence between growth and value, which is historic, and I won't go through it because we've spoken about it in previous meetings. Just as suffice it to say that it continues. It also continues by capitalization size. So large cap is outperforming mid cap, outperforming small cap, and you see that in our managers, year to date as well. And it's been also, you should note, it's been a very strong year so far for fixed income. You look at Loomis Sales and Vanguard Intermediate Term Treasury Index up 7.1 and 8.1%, respectively, making our domestic fixed income up almost 7.5% year to date. So rates have been falling in that, and you see that in the performance of your bond fund. That is an extremely strong year, or at least year to date through August for fixed income, and that is ultimately related to and helping to drive the rally in the equity markets that we've been talking about. And in fact, even today, as I've told you in recent meetings, that the fiscal stimulus and monetary stimulus from the Federal Reserve have been utterly gigantic, and they are continuing to, drive market behavior and therefore your portfolio's behavior so far. There's been some good news on the virus with respect to therapeutics and vaccines, the timeline of those arriving. The market is seeing that, but mostly it is focusing on the gigantic stimulus that both the federal government fiscal stimulus has been applied. There's more coming, although they're fighting about that right now in Washington and delaying that. And the monetary stimulus from the Fed has been utterly gigantic, and that has been driving markets lately and just today. The Fed came out with its long-term strategy and tools, practices modification or new strategic plan that we've been talking about in recent meetings. That came out today and was described today, and the markets rallied mostly today. It's been up and down, but it's been rallying mostly in response to that. And what is it in translation and summary? The Federal Reserve formalized some new practices today, which mean that they are going to be more accommodative or more dovish going forward. They will allow inflation to run a little higher if it ever gets to their target of 2%. It has been below that target and is well below that target right now because of the pandemic-induced recession. But what they said today is in order to get the unemployment rate down as fast as possible, back down to levels, more in the range of where it was prior to the pandemic, they will be more accommodative. They will allow inflation to run hot, should it do so, without raising rates. Markets interpret that, rightfully so, that they will be more accommodative, more dovish. They will be in all states of the economy. So in an accelerating economy, they will not raise rates as fast or not at all. And they will be more dovish and more accommodative and more creative in trying to help the economy in average and down times like we are right now. So one of the things Chairman Powell said, which caught the market's attention, is he said, we're not even thinking about raising rates. We're not even thinking about raising rates. And then he said it again, and markets took that. And that is, those are the primary forces driving both your fixed income and your equity returns, both month to date and really recently, since the height of the pandemic. There has been some bad news, of course, on that. There were some reclosures, if you will, or some steps backwards in some of the Sunbelt states. They probably came on a little too quick, a little too cavalier about that, and their cases spiked. And we're actually started to see that in the economic numbers, that they've had to sort of take some steps backwards, and we've seen that. But on the whole, the rebound has been pretty strong, both in the economy, but a very long way to go compared to where we were. You may recall that the GDP contracted at about a 33%. It's been revised a little bit better, but about a 33% annual rate in the second quarter, expecting it to strongly rebound here in the third. But there's going to be fits and starts, and there's going to be volatility in that. The election will be causing volatility. We've spoken about that as well. So I think we should be prepared to see, quick ups and downs between now and the election, or let's say now and the rest of the year. I think we need to be prepared for that. I think on average, markets will go up, as I've been saying in recent months, and it continues to do so. But this type of behavior, large rallies and sell-offs, I think is going to be with us here for a while, at least the potential for that. But so far, as your flash report shows, it's been a very strong month and a strong rebound in markets, and your portfolio is also expressing that. So we have no rebalancing for you to consider this month. About $7.5 million is either coming out to today or yesterday. I'm not quite sure, but well, that has been funded. Next month will be the same thing. We have cash in the portfolio right now to handle that. So we don't have any rebalancing recommendations for you today. But so far, knock on wood, so far so good. The recovery both in the economy and the markets continues, and also in the portfolio. So Mayor, if I could go over anything or take any questions at this point, I'd be happy to.
Eric, I appreciate it. I think there are a couple of comments and questions. I see Commissioner Lombardi.
Mayor, if I may, it's more of a statement complimenting the committee. If you recall, we debated moving to cash or holding the course. Ultimately, we, at least at this point, we took the right position, and it was hold the course. For that, I think that we were much better off. I think surprisingly to all of us, and I would even say to Eric, the market came back much faster than anybody had expected. But again, at the end of the day, it was a difficult decision. It was debated, and luckily we made the right decision. So I want to thank the committee for doing that.
Thank you, Commissioner. I appreciate you raising that issue again. And, if nothing else, it serves as a reminder, in the coming years, if we face another decision that just seems unprecedented and might cause us to do something that we normally wouldn't do or think sound in the normal course of affairs, it'd be important to reflect back on this decision. So I appreciate that, and I appreciate everyone's thoughtfulness as we debated and considered that decision. Commissioner Igliozzi?
Thank you, Mayor. Eric, I have a question. It has been reported at the Finance Committee, I guess the city has not made its payment to the fund itself to, I guess, something like almost $30 million, over $30 million. Is the fund still waiting for that amount of money? And did you notice that you haven't received it?
If you were to turn to page 7 of your report that we're currently looking at, you could see, excuse me, page 8, I apologize, page 8. You could see what has been contributed and withdrawn from the portfolio, at least, year to date. You
11.
See, we recently got, on
Hello?
mine it says 8.
Yes. It's
Oh,
page
yeah.
11 of the PDF
8, right.
and page 8 of the booklet.
So Eric, unfortunately, I don't have the benefit of the booklet right now in front of me. Here's my question. Maybe, and I may be, it might be right in front of everybody. Is there a payment owed to the fund right now? Let me try that instead. Is there a payment of any money owed to the fund at this time for last fiscal year?
You'd probably be best to ask one of the city authorities there. I show what we have received. So we got another 12.8 million in here so far in August. But what has been paid or hit the accounts outside of the portfolio at this point, I wouldn't have the information on that quite yet. I do show you what has come in so far.
What about the last?
So far, there's been,
what was the last? What did we get for the last quarter of the last fiscal year? Did we get any payments there?
So, Commissioner, would it help if either Larry or Sarah answer that question? They should have that at their fingertips.
Sure. So in August of 2020, the city made so far $12.8 million payment into the system. 2.8 of that was booked towards the 2020 ADC, and 10 million was a payment on the 2021 ADC. So right now we do owe about 27.1 million on the 2020 ADC, and we are making payments monthly as we receive our state pilot payment to pay down that 2020 balance.
So at this time, we're about 27 mil behind on the fiscal year 2020, correct? And we're trying to
Correct.
play catch up on that, right? Okay.
Correct. And in recent years, we've relied on the state pilot payment to extinguish the prior year ABC. So given that we don't have a state budget yet, we are sending over their monthly allocation to us while we await the final state pilot payment.
Okay. Thank you.
Any other questions? Any other comments? Okay, if there's nothing else at this point, I'll entertain a motion to accept the report as just given by Eric Bertozzi. Is there a motion on the table?
So move.
So moved by Commissioner Winkleman. Is there a second?
Second it.
Seconded by Commissioner Lombardi. Any discussion on the motion? All those in favor, please say aye.
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 Any opposed? Okay, great. The ayes have it. The investment performance analysis is approved. We'll move on to matter number 2, discussion relative to the Dexter Donation Fund and other trust accounts. I'll hand it back over to Eric.
Thank you, Mayor. If you will turn to that document, you will see the various other trusts that the Board of Investment Commissioners have purview over, and we report what those returns have been. If you turn to page 1, they're all managed very similarly. You'll see that portfolio is up about 2.6% also month to date. It's getting that year to date return is now back into the positive, which is nice. So it's now up. It has more equity than the large pension portfolio, less fixed income, no alternatives, for example, that type of thing. So that's what explains sort of the differences in behavior there. But the comments that I would have made with respect to markets in the previous section would apply here. We have no further changes or rebalancings on these portfolios to report to you or suggest to you as well.
Any comments or questions for Eric? All right, if there are none, I'll entertain a motion to accept the performance analysis for these funds as just given by Eric Bertozzi. Is there a motion?
So move.
Moved by Commissioner Winkleman. Is there a second?
Second.
Seconded by Commissioner Lombardi. Any discussion on the motion? All those in favor, please say aye.
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 Any opposed? Okay, the motion carries. And as we move on to matter number 3 on the agenda, I understand that there are no discussions relative to claims or litigation that we have here. And that being the case, I'll entertain a motion to continue matter number 3 until our next commission meeting. Is there a motion?
So moved.
Second.
Who's that?
Who made that motion?
David.
Thank you, Commissioner Hurst, and seconded by Commissioner Winkleman. Any discussion on the motion? All those in favor, please say aye.
Aye.
Any opposed? All right, that matter is continued, and I'll entertain a motion to adjourn.
So move.
I'll move Commissioner Winkleman, seconded by anyone?
Seconded.
Seconded by Commissioner Lombardi. All those in favor, please say aye.
Aye.